Hey everyone, it's Julie here with TipRanks. Today we're taking a look at two perfect 10 stocks that are rated unanimous strong buys. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two companies related to the building industry that currently score a 10 out of 10 on the TipRanks Smart Score. That is a data-driven score that looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. On top of this current outperform rating, they are also rated unanimous strong buys from Wall Street. So today we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found these companies using the TipRanks stock screener. Found under the screener menu, here I put in a few different filters, including a 10 out of 10 on that TipRanks Smart Score, upside potential over 10%, and a strong buy consensus from analysts, which gave us a list of companies down below. You can check out the stock screener for yourself over on the TipRanks website or right on the TipRanks mobile app, which you can download using the links in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into these 10 out of 10 stocks. First on the list, we're taking a look at Taylor Morrison. They trade under the ticker TMHC, currently priced at $62. The stock is down slightly overall in the past year, about 1%, but more recently has been rebounding and has gained 17.5% in the last 3 months. They currently score a 10 out of 10 on the TipRanks Smart Score with very positive crowd wisdom and increased hedge fund activity. Taylor Morrison is one of the largest home builders and residential developers in the United States. They focus on quality construction, customer service, and energy-efficient homes, designing and building single-family homes, townhomes, and condominiums. They also develop master plan communities, handling land acquisition, zoning, and infrastructure before building. On top of that, they also offer financial services like title insurance and mortgages, and operate in key growth markets like Texas, Arizona, Florida, and California. Not only does the stock score a 10 out of 10 on the TipRanks Smart Score, they also rate and outperform on the AI stock analysis. While there was a slight drop in price targets due to the expectations of a flat interest rate environment in 2025, they are expected to have resilient demand due to their lower exposure to entry-level buyers and a focus on more affluent customer segments. Near the end of April, they shared their Q1 earnings report where they did see both an earnings and revenue beat. Earnings per share came in at $2.07, beating expectations by 19 cents per share, while revenue of $1.9 billion grew over 11% year over year and beat by $90 million. They also saw their home closings revenue grow 12%, and net sale orders came in above 3,300, which was down slightly year over year. Management also unveiled their plan to repurchase $350 million worth of the share during 2025. Shortly after that earnings report, an analyst from Bank of America initiated coverage on the stock with a buy, saying that Taylor Morrison is relatively well-positioned in a tough housing market given its more affluent customer base and lower exposure to entry-level buyers. After expanding through 7 acquisitions since 2013, they view the company as set for organic growth. With 7 current analyst ratings, Taylor Morrison does come in as a unanimous strong buy. And the average price target comes in just above $73, implying an upside potential of 16.5%. Looking at those price targets down below, they range from an upside just shy of 10% all the way up to 35%. And for our second stock today, we're taking a look at BlueLinx Holdings. They trade under the ticker BXC, currently priced at $82.74. The stock is down over 24% in this past year, but also in the last 3 months has been rebounding a bit, gaining 20%. And of course, they also score a 10 out of 10 on the TipRanks Smart Score. BlueLinx is one of the largest building materials distributor in the United States. They supply everything from lumber and plywood to siding, roofing, and engineered wood products. They serve contractors, retailers, and manufacturers across the country, operating through a nationwide network of distribution centers and trucks. In short, they help keep America's construction industry moving. At the start of June, the company announced some new leadership plus an expanded distribution partnership. They welcomed Mark Mason as their Vice President of Product Management, who comes with 15 years of leadership experience and previously worked at Stanley Black & Decker. On top of that, they expanded their partnership with LP Building Solutions, expanding their stocking footprint to 19 locations, spanning 5 of BlueLinx's regions across the U.S. BlueLinx did come out with some mixed results for their latest quarterly report near the end of April. Earnings per share of 27 cents were in line with estimates, while revenue of $709 million did fall 4.8 million short of expectations. The company said that while current market conditions remain uncertain, we are well positioned to benefit from an industry recovery given our strong balance sheet, ample liquidity, and continued success executing our long-term profitable sales growth strategy. Following that earnings report, we did have an analyst at D.A. Davidson reiterate their buy rating while slightly lowering their price target. They said they were lowering their forecast to reflect moderated demand assumptions for the year, reflecting some increased competitive pressures. They added that, however, it remains positive on the stock given its discounted valuation on trough-like profitability and significant upside potential upon a cyclical demand recovery. BlueLinx does just have 3 current analyst ratings, but they do all give the stock a buy. And the average price target of $93 implies an upside potential of 13%. Looking at those price targets down below, they do range from a downside of 3% to a high-end price target with an upside of 33%. So that is a quick look at 2 10 out of 10 stocks, both related to the building industry and currently rated a unanimous strong buy from Wall Street analysts. Let me know your thoughts on these 2 companies and if they were on your radar or not before. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.